What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock, what you should be looking after for the future. I'm also going to break down why tomorrow is going to be another massive day for the markets because CPI is coming out. I'm also going to talk about Elon Musk because he has been selling more Tesla shares and what this means for the price in the future. I'm also going to give you guys my forecast for Tesla for tomorrow and the near-term future based off what trends are showing and based off what's going on right now. And before I break anything down about Tesla, I do have to mention a couple of things real quick. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is any of these 12 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 1 week. Check it out before they run out. With that out of the way, let's get on with the video. Looking at Tesla, this thing closed at about $177.59 a share, down 7.17% for the day. Tesla took another big hit today, especially after the big news that just came out about Elon Musk selling. Now, in my previous video, I predicted that Tesla would come down to about 180 a share, but I actually didn't even know about Elon Musk selling at the time. I have a very strange schedule, so I can't always record videos exactly when news comes out and upload them. But given the fact that we did have some support around 180, at least historically, and we do tend to see lots of buyers step in around here, we did see Tesla kind of fluctuate back and forth between 178 and 180 for a couple of hours for a large percentage of the day before an end of the day sell-off going into the CPI reports and also because of midterms. So what's going on with the market, right? Let's start off with midterms. All right, so far, the House is being dominated by the right, like I had predicted, but the Senate is basically a coin toss, so we don't truly know. So we're still waiting on that. It's not necessarily good for the markets in a way because there is still uncertainty and the market does not like that. On top of that, we have CPI tomorrow before the market opens. It's going to be very huge. I'm going to talk about that in a couple of minutes, but first I want to talk about Tesla and what's going on. One good thing that came out, though, to just start this off, we actually have a big announcement as there's going to be this team up between Zoom and Tesla, and there are going to be in-car video conferences. That's very cool in my opinion because it really helps lots of Tesla investors. It also incentivizes big people out there to have these meetings in their car if they need to. Now, I'm not necessarily going to go into the full details about this, but I do consider this a good thing, right? It is good to have this option, at least for many investors and many Tesla owners out there. So I think it's pretty awesome. However, now comes the other piece of news about Elon Musk. So the news just came out, I believe, like yesterday, about Elon Musk selling more Tesla shares because of the whole Twitter fiasco. And I know the whole thing is a mess. Just when we thought this was over, Elon Musk is selling more, and we're actually near a 2-year low for Tesla because of this. So what's actually going on? Well, firstly, let's actually talk about this. It was projected a couple of weeks ago that Elon Musk had to actually sell another $8 billion worth of Tesla shares, and the estimates were between 8 to 9 billion. That's why a couple of weeks ago we were talking about how Elon Musk may be selling more shares. There was lots of uncertainty about that, and the market was starting to take a bit of a hit. But now we have more data that gives us a better understanding about this. So far, as of right now, at the time I'm recording this, Elon Musk sold another $4 billion worth of Tesla shares, according to a filing report that came out a couple of days ago. Now, when it comes to data, we know that Elon Musk and himself, he's been just so focused on Twitter, buying up the company, making big changes to it. And I really commend him for the changes he's striving for, right? I still consider that a good thing. But many Tesla investors were like, okay, now you're buying Twitter. Are you going to be as focused on Tesla? And they're not really happy about that. And I completely understand why people are like this. However, when buying this whole Twitter deal and having to buy Twitter, Elon Musk did have to sell more of these Tesla shares. At least part of the reason for that is because of that. And many analysts out there have some very interesting metrics. So Tesla was actually at one of its lowest prices in a long time. It closed at about $215. And this is when Elon Musk actually started selling. So he has been selling over the last week and a half. He started his first batch and he actually sold more and more and more up until we hit $191 a share. And as a result, the share price went down about 11% in just those 3 trading days. So that's when Elon Musk was selling. So then, according to the data, Elon Musk had about 267.6 million Tesla shares, right? And he's actually going to use it as collateral for personal indebtedness and other things like that. Now, apparently, he holds about 19.7% of Tesla's outstanding shares. And remember, he was actually holding about 22.4% right before the end of 2020. So now when it comes to the data, Musk still owns about 445.6 million Tesla shares, and he actually has exercisable options for about 177 million. So that's going to be very important because it really tells us more about what is actually going on with Musk and why on earth he is going to continue selling. So he sold about $8.5 billion worth of Tesla shares in April. I'm sure you guys remember that. The share price took a big hit. And there is going to be more projections for him selling another like 8 billion or so. So he is going to likely continue selling. And there's no indication of him being done. So what happens during a time like this, no company likes it when their CEO is selling. That's the first reason why Tesla is dropping. Right? There's a psychological effect because of this, because now people are fearful. They don't know what Tesla is doing. It's underperforming compared to the market. And on top of that, we don't know that he's done or not, at least as of right now. There's no confirmation of it at the time I'm recording this. So because of that, there's uncertainty. And we know the market has a tendency of dropping on uncertainty, and this is affecting Tesla big time. If we compare Tesla to SPY, we could see, Tesla was moving with SPY very closely because SPY has a tendency of being correlated with the QQQ, the IWM. I mean, these things were moving almost in unison for quite a bit of time. But recently, if we look at this recently, SPY was outperforming Tesla over the last couple of weeks, and Tesla was just coming down like crazy. And it makes so much sense because when you have a man selling billions of dollars worth of a company, it's going to really cause the share price to be shocked. And there's not enough buying pressure to really offset that, right? At least that's what tends to happen. So when you look at the data, Tesla's at the lowest price price ratio we've seen in the last 2 years. We've never seen Tesla like underperforming compared to the market in so long, and it's not the best of signs. Now, many analysts are still very bullish long term, of course, and this is opening doors for a very good buying opportunity. Now, historically on Wednesdays, Tesla's actually only green about 48% of the time. And tomorrow is Thursday, I just forgot. On Thursday, Tesla's only green about 47% of the time. So Thursdays tend to be red for Tesla as well. Historically, if you look at Tesla for the past year, Tesla tends to do very well during the opening days of the week, then slows down a bit during the later days. And if this trend continues, there could be more potential downside because of this for tomorrow. What else is interesting is when you look at the short interest, I was talking about this yesterday, guys. I was anticipating the short interest would go up. The data is now in, and we saw another big increase in the short interest. This means that Wall Street, institutions are shorting Tesla to oblivion. We're seeing so many puts being bought. It's causing lots of downward pressure. And on top of that, the news, the way this affects psychology for many investors is also playing a big role in the selling pressure that's making the majority of the volume. So all this data is suggesting that Elon Musk may be selling more, at least, like I said, at the time I'm recording this, there's no confirmation that he's done. He might continue to sell. We actually broke below 180, which was supposed to be some pretty decent support. And now we are on the verge of filling the gap. I think there's a gap around 173. We could fill this gap down here and end up coming down to this level. And if we end up coming that low, it becomes more likely we come to another key zone around 170. I didn't see a very historical like demand zone around here, but we could see this thing try to bounce around here. We have another gap, I think, around 166 from the past. We could come all the way down there if this thing breaks below 170. So watch that very carefully. Now, am I guaranteeing Tesla will drop tomorrow? Well, it depends on if Elon Musk sells more and how the market responds to other factors. If we just ignore CPI for a second, all right, let's just say CPI is not coming out tomorrow. It is still very likely Tesla would continue to sell off if Elon Musk is selling more shares. As long as there's no confirmation of him being done, this thing still has uncertainty and it's likely going to continue to come down. Now, another big factor is CPI, and that's where I really want to transition because that's going to really affect Tesla. When we look at CPI, all right now, economists from Wall Street, many different analysts out there, they're all anticipating that CPI is going to be lower than expected. And I would be very careful with these projections. The main projection for CPI is 7.9%, according to Bloomberg and many other articles I've found. And then core CPI is supposed to be around 6.5%, according to these analysts. Guys, I'm not as optimistic about this report, and I want to talk about why. So just note that CPI could really shock the markets. The last time CPI came out, SPY crashed to 348. That's the all-time low, or I'm sorry, the low of the year. And then we got a huge bounce and a big move to the upside. So I expect crazy volatility tomorrow. But one thing that concerns me would be these gas prices. If we look at the data on this chart right here, you will notice that for June, gas reached its peak for the year. Then it started declining over and over and over again. And then we got a big bounce after September. So for October, gas prices went up on average. When it comes to the data specifically, for September, the average gas price for a gallon of gas in the USA for retail was $3.82. For October, it was $3.94. So gas went up, not a good sign. And I say this because remember, gas prices were coming down from June to September. Remember that. When you look at the data, you will notice CPI, the overall CPI, when you include gas and energy, food and energy, you will notice it was downtrending in June, July, August, and then September. And this was correlated with those gas prices coming down. Why? This is significant because when you look at core CPI, this is all items without food and energy, core CPI was going up. This means the prices of everything, inflation rate for everything was going up for everything, or at least about everything, right? I'm trying to be like kind of precise when I say that. For July, August, and September, the only reason the overall CPI was down was because of gas prices. They caused it to go down. That's it. If you ignore gas, inflation was still going up and coming close to new highs for everything else. That's not a good sign. And now what worries me is, okay, gas prices went up again. So the overall CPI might actually be a little bit higher than expected. And on top of that, I mean, if core CPI is up again, like these other commodity prices, other things that affected, which is not necessarily started from the Fed's end, it's not going to look good. So am I trying to cause you guys to panic and cause lots of fear in this market? The answer is no. As of right now, the markets are kind of neutral, probably a little bit closer to the fearful side once this updates. But right now, people are still very apprehensive. And Jerome Powell was talking about how inflation is still very high. The Fed is still ready to be aggressive if they have to be aggressive. All right? It's still very important to note this. And this is going to be important because it affects when the Fed ends up pivoting. If inflation is super high, the Fed is going to take longer to pivot. If it's starting to show signs of coming down, they may pivot a little bit sooner. I just don't see it happening super quickly. So let's look at the data and just talk about CPI now. The expectation is 7.9%. All right? If we get anything below that, it's going to be pretty good for the markets. Anything above that would be pretty bad. And in my honest opinion, considering that gas prices went up, I wouldn't be surprised if we get 8% to 8.1%, which is going to be pretty bad. But that's only half of the picture because core CPI is just as important. Core CPI, once again, is without food and energy being included. The expectation is 6.5%. All right? Anything from like 6 to 6.5% would be pretty good because we don't want this to be high. But 6.5% itself would just be okay. It's going to really depend on the overall CPI then in that case. But if we get anything at 6.6%, 6.7% or higher, it's going to be very bad in my opinion when it comes to what the Fed is doing. Now, when it comes to inflation, inflation is a very sticky thing. It tends to actually stay high at these levels and then slowly come down. So it's not going to be a good sign if this thing is high. I don't think it's going to cause us to crash to new lows instantly. I don't really think that, but I do believe it's going to cause a shock to the markets and we will see lots of volatility and the market could take a hit if this is not necessarily that good in my opinion. Now, please note, I'm not like a fortune teller. I'm not Nostradamus or anyone like that. I don't truly know what CPI is going to be like. So please take that with a grain of salt. But given the data I showed you, I think it's a little bit more likely to be higher than expected, just a little bit, which is why I do think we could see some potential downside in the markets, at least a little bit. We could see the market come down a bit. Now, for SPY, if CPI is really, really good and we actually see it lower, we have potential to push up very hard and fill the gap at around 382. If things are bad when it comes to CPI, SPY could come all the way down to this 370 to 368 level. And we know the selling pressure could also affect Tesla, at least to some degree, because SPY tends to be correlated with the QQQ. On the QQQ's end, right here, very similar story. If inflation, and remember, CPI is just one of the many measures of inflation. It's not 100% perfect, but the market tends to accept it, which is why I talk about it. If CPI is lower than expected, QQQ could push up, which would be kind of good for Tesla. It could help us at least to some extent and fill the gap. But if QQQ does end up seeing a big downside, it's likely going to be associated with high inflation, which is still very possible, to this demand zone around 261 to about this 258 level. So there's a demand zone right here. I do believe we are going to retest it if things are very bad and the market responds negatively. So please be ready. It's going to have a negative effect on Tesla because the NASDAQ does affect Tesla, believe it or not. Now, other big stocks out there, we can actually talk about like the VIX. I was talking about this in a previous video. I thought that the VIX would see a bit of a bounce, and I was wondering if CPI would be the cause of it. We're already bouncing right here, which is a sign of weakness in the markets. Because remember, the VIX is starting to bounce and push up. This tends to be associated with a bit of a drop in the markets as there is more volatility and an inverse relationship. What does this all mean for the market? What does this mean for Tesla? All right. Finally, into the juicy stuff. Tesla right now is just free falling because we don't know what Elon Musk is doing, and there's likely going to be more downside. But the downside could be a little bit more extreme if the whole market is crashing at the same time because of CPI. Now, if CPI comes out okay, there's a chance Tesla might hold this level and try to go to like 173, maybe hold it, come back up, and just trade kind of sideways between this 186 to 180 range. We could kind of trade sideways a little bit if Musk is not selling much more, if Tesla's ready to bounce it because it is oversold, and if CPI is okay, right? But if CPI is like really bad again, or it's like kind of bad, and the market's coming down, and it also depends on if Musk is selling more and what the news says about that. If all these things come together, Musk is selling, for example, Tesla's going to come down, CPI is high, the market's coming down, and Tesla's going to come down even more. This thing could hit 173 and then break below that. The next key zone I'm going to be watching for, I do believe 170 is key, but I'm not as confident in us holding this level now because we do have a gap around 166 from before. And on top of that, we did see Tesla make a big reversal in the past. Let me actually show you when this happened. So Tesla's at the lowest level we have seen in years. We haven't seen Tesla this low. Now, let me actually find how far back I have to go, all the way back in 2021, early 2021. This is when we were seeing Tesla in these levels. So first off, like I mentioned, guys, we had a demand zone around 180, this 178 to 180 level. Tesla broke below it. So Tesla is showing lots of weakness. And then on top of that, right here, there's a mini gap around 173. There's another clear gap around right here around 166. So we could come down to fill this gap if things don't really go as planned and Musk keeps on selling and there's more fear and excitement in the stock. I'm not saying it has to happen tomorrow, but it could happen over the next couple of days. Now, finally, another key zone we have seen Tesla kind of bounce off of is around like 149 to 150, around 150. So it could even go that low if things are very, very bad, guys. If Musk is selling billions of dollars more worth of Tesla shares, there's more selling pressure and the shorts continue to pile in, I'd still be very cautious. So for tomorrow, though, if we're going to talk about where this thing is going, the problem is there's no clear sign of a big bounce on Tesla, guys. This thing continued to drop. It broke below 178, and we actually closed there, which is not looking too good. What I'm seeing on Tesla is this. If this thing continues to come down, all right, if Musk is selling more and more and more, I likely see this thing hitting 173 tomorrow if we're going to keep coming down. And I don't think 173 is going to act as like a big bounce area. I'm just highlighting this because we did have a gap here. 170 is what I'm going to be watching. Let's see how this thing reacts. Because if we don't hold 170, then we're likely going to hit 166. Now, if CPI is like doing very well, like I said, if CPI is like lower than expected, Tesla might not crash as hard or like come down as hard. But then again, it really depends on the data. So please be very, very ready. But please also note the bigger factor out there, and that is the fact that Elon Musk is likely going to continue selling. I mean, there's no indication that he's done selling yet. I haven't even seen him like tweet about that. So if he's going to sell more, guys, please be ready for more potential downside. Watch support and resistance levels very carefully, and please remain calm, cool, and collected, and be ready for CPI. Like I said, guys, I'm prepared for anything, but I do believe it's a little bit more likely for CPI to actually come hotter than expected and cause the market to come down. So thank you for listening. Have a great day. Tesla to the moon because the long-term future is still incredibly bright. This is a very good buying opportunity to dollar cost average. It's another opportunity. So thank you. Thank you so much for listening, and peace out.